Today, we're going to talk about the S corporation election and how it can potentially lead to significant tax savings. This presentation is designed to help you understand the benefits and considerations of this tax strategy. And we'll also compare it with the Schedule C reporting to give you a better idea of how it helps. By the end, you'll have a clear understanding of how S Corp status can benefit your business. My name's Jacob Curtis. I'm a CPA, certified profit professional, and a business coach. I started Curtis Accounting Solutions to remove the stress of doing the bookkeeping, payroll, and taxes, and to provide practical business advice that helps e-commerce stores piece together financial freedom. I'd love to hear your thoughts and questions on today's episode, so please leave a comment below and remember to like, share, follow, and subscribe. This presentation is for educational purposes only. You can seek specific tax advice for your situation from a tax professional like myself. Yes, you can scan that QR code on the screen to schedule a call with me, a tax professional. An S-Corp is a type of corporation that meets specific IRS requirements. One of its main features is pass-through taxation, which allows income deductions and credits to pass through to shareholders without being subject to corporate tax rates. This can be a significant advantage compared to other business structures. Additionally, S-Corps have limits on the number and type of shareholders they can have, and they can only issue one class of stock. Schedule C is a form used by sole proprietors to report their income and expenses from their business. It's also part of the individual tax return Form 1040, and all of the business net income is recorded on that Schedule C, and it's all subject to self-employment taxes. This can significantly impact the amount of taxes that a sole proprietor pays. Let's dive into the key benefits of S-Corp status. Firstly, pass-through taxation eliminates the double taxation seen with E-Corps. Secondly, S-Corp shareholders save on self-employment taxes, or can significantly save on self-employment taxes. Additionally, S-Corps can deduct certain expenses such as health and car insurance premiums, retirement plan contributions, which can significantly reduce the taxable income. Finally, some states offer additional tax benefits for S-Corps, which can further enhance your savings. As an e-commerce store owner, you can save significant amount of self-employment taxes with an S-Corp. Unlike the sole proprietors or LLCs, S-Corporation shareholders only pay self-employment taxes on their salaries. The remaining income can be distributed as dividends, which are not subject to self-employment taxes. This can lead to substantial savings, especially as your business grows. So let's look at a simplified example. Assume a business has a total net income of $100,000. For an S-Corp, we allocate a reasonable salary to the owner of $60,000, and the self-employment taxes are then calculated only on that salary, resulting in a $9,180 self-employment tax or employment tax. In contrast, the Schedule C filer pays self-employment taxes on the entire $100,000, totaling $15,300. And this results in a tax savings of about $6,120 for the S-Corp owner. Electing the S-Corp status requires your business to meet certain criteria. You must be a domestic U.S.-based business, have allowable shareholders such as individuals and certain trusts and estates, and no more than 100 shareholders. Additionally, you can only have one class of stock. Once these criteria are met, you need to file Form 2553 with the IRS, and this form must be signed by all of the shareholders. So while the tax benefits of S-Corp status are appealing, there are compliance requirements to consider. Shareholders who work for the company must be paid a reasonable salary, which the IRS will scrutinize closely to prevent underpayment of employment taxes. Additionally, S-Corps must comply with payroll tax requirements, including withholding and remitting payroll taxes. And lastly, despite the tax benefits, S-Corps must adhere to corporate formalities, such as holding annual meetings and maintaining meeting minutes. To illustrate, here are some examples of compliance requirements for the S-Corp. You must hold an annual shareholder meeting and document major business decisions. Also crucial to maintain a separate business bank account and file payroll reports with the state and the IRS. Adhering to these requirements helps you ensure that your S-Corp remains in good standing with the IRS and remains an S-Corp. Now let's consider a case study of an e-commerce business with a total revenue of $200,000 and expenses of $80,000, pretty sweet gig. But that results in a net income of $120,000. By electing the S-Corp status, the owner pays a reasonable salary of $70,000 and distributes the remaining $50,000 as dividends. The self-employment taxes are only applied to the salary, leading to significant savings compared to paying self-employment taxes on the entire $120,000. In fact, that tax savings is above $7,000 compared to a Schedule C filer. So while S-Corp status offers many benefits, it isn't always the best choice for every business. If your business net income is low, the tax savings might not justify the additional administrative costs. Additionally, if you cannot pay yourself a reasonable salary due to cash flow constraints, IRS could reclassify your dividend as wages, negating the tax benefits and incurring some late filing fees for payroll taxes. Finally, if you plan to raise venture capital, an S-Corp might not be the best structure, as investors often prefer C-Corps due to their flexibility in issuing multiple classes of stock. Here's a comparison between an S-Corp status and Schedule C reporting. While both have their advantages, S-Corp offers potentially more significant tax savings, particularly in that self-employment tax arena. However, it also comes with additional requirements, such as paying a reasonable salary and adhering to those corporate formalities. If you're considering transitioning to an S-Corp, start by evaluating your current business structure and consulting with your CPA or tax advisor. They can really help you understand those implications and guide you through the process. If you ultimately do decide to be an S-Corp, you'll need to file Form 2553 with the IRS, adjust your payroll processes, and implement the required corporate formalities. Before making this change, consider the initial setup and ongoing costs associated with forming and maintaining the S-Corp. There will be an increased administrative responsibilities, including the need for proper bookkeeping and accounting and those corporate formalities. Additionally, think about how it's going to change and impact your future business plans. It's essential to weigh these factors carefully before making any final decision. In conclusion, S-Corp can offer substantial tax savings for your e-commerce store, particularly with self-employment taxes. However, it's crucial to weigh these benefits against those compliance requirements and potential additional administrative costs. So consult with your tax professional is advisable to ensure you make the best decision for your business. If you have any questions, you can scan the QR code on your screen. Don't hesitate to reach out to me. I'm here to help you piece together financial freedom. In fact, go ahead and schedule that call by scanning the screen or going to jacobcurtiscpa.com/5-strategies-calendar. So we'll get started. And remember to follow me, Jacob Curtis CPA, on Facebook, Instagram, Pinterest, and YouTube. Thanks for watching, and we'll talk to you soon.